Hi everyone, and welcome to 3 Charts in 1 with me, Richard Perry, market analyst for Infinox on Wednesday the 10th of August. Now it's US CPI day today, inflation, and in front of that data we've seen markets very quiet, but I've got 3 charts which could be moving later, and I've got US S&P futures, I've got the gold price, and first of all I'm going to start off with the cable chart. Now sterling dollar has been in this recovery phase in the last few weeks, but it's rolled over, it's broken that uptrend, and it's now starting to build a new trend lower. Now it's not a decisive trend lower, you could argue it's still just unwinding back towards this breakout support area, and that breakout support really is sort of teetering though, isn't it? You've got these negative candles, all these candlesticks have got small bodies, arguably it's indecision ahead of the US CPI, but also towards the low of the day as well on these candlesticks, or negative. And it doesn't look great, does it? Momentum has just fallen over RSI, now back under 50. On the 4-hour chart, you can see this sort of configuration now consistently below 50 on the 4-hour RSI, which suggests a more corrective move, and it seems to be building lower highs and lower lows. So that support that we've got there at 120, big figure effectively, if you start to see a 119 handle, I think that is breakdown territory again on cable. So that's the level of support that needs to hold. If it does go, then you're looking certainly lower back towards these sort of 118s area, 118.90, and then potentially 117.60 again. So really is sort of starting to look as though it's starting to turn corrective again. So that inflation data today could be key for that. The US inflation comes in higher than expected, dollar strengthening, cable lower, that would be the move. So in terms of resistance, you're looking at the recent resistance, I suppose, at 121.40, but essentially 122.10 needs to be broken to sustain any sort of recovery potential on cable. And onto the gold price, again another uptrend, but this one is intact, and gold is certainly managing to hold ground despite the fact that the dollar has been starting to strengthen again in recent times. And it certainly looks as though that the market is holding this uptrend for now, ticking higher in the last couple of days, held on to that uptrend nicely. Inflation, if it comes in above expectations, is dollar positive, but also can have a gold supportive element to it as well. So it will be interesting to see how gold reacts today, but breaking out above the 1795 area was important yesterday. Certainly didn't manage it on a closing basis, but starting to move that way, and above 1805, that would be the real sort of breakout moment, I think. But look at the momentum, still positive on that RSI, above 50 consistently on the daily chart. Our 4-hour chart consistently above 50 as well, so still hanging on to that improving momentum, still posting higher lows and higher highs, looking okay. So you've got the support that comes in here, 1765 initially, this reaction low that we had from from a couple of days ago. 1765, that needs to hold, but the important one is 1754, 1752. Those need to hold as reaction lows. If they do go, then you're starting to turn corrective again, but certainly for now gold is holding ground and looking positive. Finally, S&P futures, another chart that has been in this uptrend higher, but it's now in a consolidation phase that has now broken that trend. So this sideways consolidation over the past sort of week and a half has now sort of moved between 40.80 and up towards 41.70. And it's holding the support at 40.80. Whilst that is intact, I'm still okay with this chart. It's just sort of unwinding a little bit on very strong looking RSI. So it could just be that this is just biding its time, and it may well even sort of see an unwind back towards sort of 4020. But essentially, I'm still seeing this as a recovery. Look at that 21-day moving average. Look at the golden cross with the 55-day moving average, which is also now rising. So still positive, still looking as though that this is a market that is in recovery. But it doesn't obviously need to get back above 4,200. That is the key level of resistance. If I go back one more level, you can see that that is the first real lower high of the sell-off. So if you can get back above that, that is a really strong signal on a technical basis. So that 4,200 resistance is key. For now, we're just consolidating As I said, in this little mini range, 4,080 needs to hold ideally, but even if that does go, as long as it doesn't start breaking below this reaction low here at 3,920 area, I still think that this is a chart to buy into weakness and to play for this recovery. So with that in mind, I wish you good luck in your trading, and I'll speak to you soon. Thank you very much.